365, shake my hand, ladies and gentlemen, and welcome to another video. I want to talk to you guys about Bitcoin. It's going to be quick, not a long video, because there's not a lot to talk about. I am a little concerned. I'm a little concerned because media is doing it again. There are a couple of, bullish headlines about Bitcoin, a couple of bullish headlines about the bank's adaptation, a couple of headlines about how Bitcoin can now be added, right, to the balance sheet of companies, okay? And that's got a lot of people thinking it's time to go to the moon again. I don't know how we keep making this mistake. I am genuinely confused at how this is possible. So one more time, let's get back to the chart. Let's really break down this chart down. I've looked at Bitcoin on the 365 Train Academy YouTube channel many times. If it's your first time on this channel, shake my hand. Don't worry about the grayscale camera view. I just like it gray. Don't forget to like, share, and subscribe. But if you go back to my earlier on videos this year, we spoke about the tipping point of the markets. We spoke about Nasdaq, S&P 500, risky assets, cryptocurrencies, and we spoke about ideal places where price was going to land. This is a chart in front of us. So far, I have not been wrong since January. Okay, that's very important because if someone's going to create education videos on YouTube, you actually want to keep a good track of their track record. I say it all the time. Every Sunday on this channel, I give you guys swing signals, right? So you can actually see that overall, right, on a scale of probabilities, in a cluster of trades, supply and demand is by far the most accurate way to predict, okay, in a probability manner where charts are going, where the markets are going. And if you master supply and demand, you generally can master your trading, at least to a point where you become a consistent, profitable trader. And we use those simple skill sets to look at this chart. We spoke about this, man, it's crazy. We spoke about how we're gonna break 30,000, and we did. We spoke about how even if price comes back, we're gonna retest it and break it, and we did. We spoke about the psychological level of 28,500 and why that level was so important in the markets, and we broke it, right? And this has been a non-stop show going on. I'll give you Bitcoin on the weekly time frame. On the weekly time frame, we spoke about how normally price will create this specific type of rising channels, right? I'm gonna make that one thick there, maybe make it blue so you can see it, right? 1, 2, and I spoke about this. I remember on the same channel that you're watching this video, and all the proof is in the pudding. I told you guys that, listen, man, when you see this big channel happening on the daily, weekly time frame, but your governors, the higher time frame, your monthly charts are not in alignment, and what's in alignment with price or what price is doing will always come from the governing chart. And so when you see an upward channel on a chart that we know too well to need more room to drop, needs to keep going down more, there is a high chance that this is just a buy the rally setup. This is the most recent buy the rally channel that Bitcoin gave us. I'm going to make it blue as well so you guys can see it. And we spoke about it, and the same thing is happening again, or at least it feels like it is fundamentally. Remember, for anyone to make money in trading, somebody has to know more than the other, all right? There's dumb money, there's smart money. Even within smart money, one trader has to be wrong for the other one to be right. It's kind of like how it works. So the way you channel information, the way you perceive the markets, and the way you think through stuff about yourself and money and the markets, aka trading psychology, is a very big important factor into whether or not you're going to be profitable. Right now, Bitcoin arrived at a very, very significant demand, supply and demand. Bitcoin has, technically speaking, for all intents purposes, stayed at that demand since June of 2022 this year. So I'm talking June, July, August, September, October. We're talking about 5 months of a basic range, all right? We had a little bit of upward momentum, and all of a sudden, when it was now getting too hot, we had a bearish engulfing candle on the weekly time frame, and then another one, and price fell. Now, there are fundamental reasons why this is the case. Interest rate hikes, inflation fears, FOMC, hammering the markets, and the fear, right? The anticipation of when the pain is going to stop or when it will not stop. How long will the pain last? How long will the Feds remain aggressive? How long will they refuse to open the taps? Remember when we're doing quantitative easing in the markets, when the government is printing money, more people have money to spend on things like buying crypto. But once you start to tighten the tap, monetary policy tightening, right? This restriction of funds means fund or money moves to safe havens, as we saw with Bitcoin, etc. So we've seen this, safe havens being the dollar, right? The safe haven champion this year is not gold, it is the dollar. And we've seen this play out through and through on the charts. So here's Bitcoin now, really much sitting through. You see me with my red arrows. Every time I put my red arrows, price over some time will follow this path, right? And it's simply because we use clean supply and demand levels. Right now, when looking at Bitcoin on the daily time frame, I just want to bring something to your attention as quickly as possible, right? So these are those rising channels that I drew for you there on the weekly, and you can see a similar one right here where, Bitcoin had done a massive head and shoulders, and of course price fell through, and of course price fell through. Remember, on the channel there's a video called Liquidity, a beginner's guide to liquidity schemes, right? This schematics is easy to tell if you're taught that you always buy at the bottom of an upward channel. Of course, there were many buy orders here. This had to break. This little rectangle is literally sitting on top of a 1 hour supply. Those of you who follow my channel and those of you who have become phenomenal intraday traders, you will know why the 1 hour chart is such an important chart to our strategy for day trading, right? And we use the day chart for swing trading, but there you can see right there where I highlighted there was a clean order block which broke that upward trend line, which was the main result for price to come back and make contact into this area on the 13th of September, which gave us this beautiful drops that I'm looking at. Now back to the daily. There is nothing, first of all, in the fundamentals about Bitcoin going up anytime soon. I don't care what headlines Wall Street is going to feed you. I don't care what Michael Saylor does or what Elon Musk does. It does not matter. The headlines that you guys are reading and basing your trading on are literally bait, right, to trick you out. What I see happening, which I've said many times on this channel, which I am happy to repeat again, hopefully for the last time, but I'll keep coming back. As long as I feel like there's going to be a big mistake in the market, I'll keep coming back. If I was to just draw and this is not necessarily the best trend line to draw, but basically just a thought process trend line. That is a psychological level to see what the markets are doing, and I'm going to make it red. If I was to draw this red trend line that I've just done there, that has had two touches up there, a third confirmation touch there, and come back right perfectly in the supply, we can see that price has been squeezed. Right now, if I was to draw a similar line just across here, right, so something like this, right, we could then say I've got a peanut or a pine nut pattern, right? A descending triangle pattern. All these things have got different names, but the long story short is we are now expecting a breakout soon. Now, most people who are optimistically and emotionally tied to their money, that's the trading psychology part. When you're emotionally tied to your money, you make poor investing decisions. Most people want a breakout to the upside. That's the general thought. And even if we were to get it, I want you to know there is a fresh supply here at about 21,900, which is most likely to push price down anyways, all right? That's one perspective. If this supply gets taken out, then sure, you're gonna get a rally for about 2 weeks. I don't think that's the case. I really don't think that's the case. On the 2nd of November, we get another FOMC sit down. There is a high probability that the minimum that we're going to get is a 75 basis point rate hike. There is a 50% chance that we might even get 100 a basis point rate hike, right? But most likely 75, which is still quite a lot. Currently, the Fed fund rate is at 3.25%, right? So another 75 basis point hike on the 2nd November puts us over 4%. But inflation, we just got the data last week, is at 8.2%. there's still a lot of room, right? So it is unlikely that risky assets will see a healthy rally to the upside. Very unlikely. And if it does happen, it is a highly manufactured rally. Be very careful, right? So the worst case scenario that you might get a breakout from this area is, remember, you will most likely be stopped at about 21,500. Right, the price will deal with massive sell pressure. There is, however, a higher probability chance that markets are going to fall, that price is going to fall here. Now let's just do some basic technical analysis, right? With our pinite or peanut structures, our triangle structures, you just really want to calculate the length of the base, right? The side of the triangle, right? And 9 out of 10 times the drop will always coincide with the length of that. So if I was to put that there, if there was one more final touch into the upper part of this rectangle, right, we can see price coming well within the 12,000 range, which I said in January when everybody thought I was crazy. I said price was going to come there in January. We are still going there. All right, that's one way to look at it. The other way to look at it, without necessarily getting all too technical, is to look at those higher time frames that I told you about, and you can see that the only next available place for real buyers, institutional buyers, whale buyers, people who understand order flows, filled orders and unfilled orders, the next place for price to come is at that 12,000 region, right? So Bitcoin, believe it or not, has to drop more. In fact, historically, Bitcoin will fall 80 to 85% during bear markets. We actually haven't received a full 85% discount on crypto. But let's see where we are. If I go to to last year's ultimate highs and I just drag all the way down, I'm looking for 85% on the percentages. You can see that's 82, 83, boom. There's my 85% right there. You can see that 85% is in that region between 10K and 12,000 US dollars. I have now done this in 3 different ways to come up with the same conclusion that price has to come down. Now, some of you are then wondering, Leroy, my portfolio is on fire. I'm down 70% on crypto. My Ethereum is down, Bitcoin is down, Cardano is down, XRP it's back up now, but was down at some point. What is going on? What should I do? It tells me 2 things about you. Number 1, you still don't understand what investing is, right? You've got such a short time frame of investing, and that's going to destroy you along the way. But number 2, either you don't know about trading or you're not a good trader. Any good trader, and I really hope a lot of the 365 family did this, any good trader should be hedging. What does this mean? There are different ways to hedge, but here's a simpler way to hedge. If you own crypto, you own the coins, you own the investments, you've been buying dollar cost average, which I hope you have been doing throughout this whole year. And I hope you understand that the lower we get to this 12,000, 10,000 area, the more prudent, not financial advice, I am not your financial advisor, all right, but the more prudent it seems to be that your dollar cost averaging amounts need to become a slightly bigger, because now the value of the asset has dropped a lot. It's gotten a little bit more cheaper. Now would be a good time, not financial advice to anyone really, but now would be a good time to start pouring in a little bit more, because as the value drops, right, you can start to buy more of the crypto. That's one. But as prices going down and your dollar cost averaging, your portfolio surely will look like it's taking a hit. How are we supposed to hedge? I've said this before and I'll say it again. You need to be on platforms like FTX or Binance. This big crypto spot exchanges where you can trade. You should be selling the spot price of Bitcoin. You should be swing selling. You should be holding sells from these supplies. You should attend my war rooms on Sunday, because I always tell you when to sell, where to buy, why to get out, etc., all for free. This is not like some sales pitch. Like, I do this every single Sunday, weekly, Sunday after Sunday. I give out about 20 to 30 charts on Signal, so where people can just get money, literally just apply apply the rules and get money. No costs ahead. But this is what you should be doing. A good trader who is buying Bitcoin has got a sell limit order right here. A good trader who's buying Bitcoin has got a sell limit order right here, waiting to see if price will make contact with the supply to sell. So you're selling on the spot market, right? And you're making profits, therefore hedging. So the same amount of value that you're losing as price goes down, you're making different amounts as you trade it down without having to sacrifice the asset and sell it. That's a lot of people are doing. It's crazy. A lot of people are like, Bitcoin has dropped 70%. I might as well sell all of it now and get out. Not financial advice, but I guarantee you, you are going to regret that decision 2 to 3 years from now. You should be holding your Bitcoin and leveraging your understanding of supply and demand and selling the stuff on Binance, FTX, on these great exchange platforms where you can trade crypto without owning the crypto and taking the profits from the easy sell trades. It's a bear year. We are bears. We are not looking to buy retracements. We want to use retracements to add to more sell orders. Those profits should be helping you buy the asset. It is one simple long-term strategy. You live off the sales on the trade. 50 to 10%, 20%, however you decide, goes back to buying the asset for yourself. You get yourself a cold wallet and you rinse and repeat until the bull market begins. When will the bull market begin? Well, we need the Fed to slow down. We need a Fed viewpoint. We need inflation to cool off. We need Powell to say, look guys, we're done with rating hikes, we're stopping. Look man, I hope this video rocked your world. I hope it made sense. I hope you will do something that makes sense. Don't forget to like, share, subscribe. Check out our courses, supply and demand course #1, but also on the 1st of November, I'm kickstarting that month with 4 weeks of ultimate trading psychology, theory of mind, psychoanalysis, everything that a professional trader needs to understand, confirmation biases, stuff that I've never seen being put together and taught like this before. You don't want to miss that. Even if you don't get the supply and demand package, definitely get the trading psychology because it works for all strategies. Only $100, only $100, and you get lifetime access to our trading psychology room. Make sure you're there. 3, 6, 5, shake my hand. Peace.